London and Toronto listed Arian Silver operates the San Jose silver mine in the prolific Zacatecas region of Mexico. It's been working hard to bring its zinc and lead silver production online. Jim Williams is chief executive. He joins us now. Jim, welcome.
Hi, Jeremy. Nice to see you.
I don't have to say how difficult it is for anybody in the silver business because of the drop in the silver price. We'll talk about the drop in the silver price in just a minute, but I want to talk a little bit about the company because you are working towards full production. How's it going?
It's going well. We are halfway through commissioning, 3 months into commissioning right now. We expect another 3 months before we finish commissioning. Inevitably, we've had hurdles. That's what commissioning is all about, and these are mainly mechanical and also chemical stroke reagents. So right now we're fine-tuning all this, and at the end of 6 months, we expect to have all this nailed out nicely, and then on and upwards.
You're doing zinc as well as lead silver, aren't you?
Yes.
So there's 2 lots of commissioning going on here. How are each individual one? Is there a differentiation between the 2 in terms of progress?
Yes, well, there's 2 different concentrates, or there will be 2 different concentrates. 90% of the silver reports lead, and we sell the lead silver as one concentrate. Then the zinc concentrate is a totally separate entity.
So, in terms of the plan from here on, I think originally you had been talking about 18 months for the commissioning process to go through, but I've heard it said that you are on top of that, and in fact you expect to complete this earlier, do you?
Basically, it was 18 months to get up to full production. So, ramping up from 500 tonne a day to 750, 1,000, 1,200, eventually to 1,500. Commissioning in itself is going to take 6 months, give or take a month, you know. And we just recently had a planned audit by a bankable company in Denver who's concurred with everything we've done so far to be good.
Yeah, and the costs involved in commissioning, are they going along as planned, or have you come across anything you weren't expecting?
Minor things which are either no cost or small cost alterations, but basically going to plan at the moment. As you mentioned, right now the only negative thing is the fall in silver price. Yeah.
Well, we'll look at that in just a minute. I want to get back, if I can, to the way in which you're paying for all this, because you had a financing I think it was last October, wasn't it? $32 million. Yep. So presumably the lion's share of that is left, or are you eating into that quite considerably for this commissioning process?
We're eating into it as per budget, but basically more or less half of $32 million was to replace an existing convertible note, and the remaining $16 million was on the base metal purchasing agreement. And we've had various milestones, completion of certain milestones, mutually agreed, and we have a drawdown of money. So we've had all bar one milestone done, and the last milestone will be the completion of a saleable zinc concentrate, which we expect to have shortly. And when that's done, that's all the money eaten into. Of course, we still have money on the account, right? But from a drawdown point of view, that's it.
In terms of the process from here, your all-in costs, I know when the plant's up and running at full capacity, is about, what, $14 an ounce, I believe, is that right? But obviously in this process, presumably that's higher at the moment, so obviously you've got the money to pay for that excess cost. Going to the silver price, $14.67 a share, I think it is at the moment. Even when you're at your best case scenario, you're only earning 67 cents per ounce. What do you say to investors that bought into this stock? They've seen the share price slide, they look at this, they look at the silver price, they look at your operations, and they say there's such a slim volume in this, such a slim profit in this.
Well, right now, yeah, I mean, $14 all-in sustaining cost is at full production. And as you correctly said, when you're commissioning, you are incurring less throughput, inevitable issues here and there, so the cost will be much higher per ounce. So arguably right now, we're not making money. Our costs right now might be $19, $20 per ounce equivalent, whilst commissioning. I think we're all surprised where silver is right now. I mean, when I co-founded this company 10 years ago, silver was less than $6 an ounce. It is now $14, $14.5, $15. It has been $40 plus in 2011. We're all concerned with silver, but let's not panic over silver. We'll make this operation work and we'll fine-tune accordingly.
The fine-tuning process, does that include looking at your cost base? Is there margin to be taken out of cost, do you think?
There's always margin to be taken out of cost. Right now, we're probably one of the lowest G&A companies, but then we can always cut further back on G&A. Certain costs we are stuck with, for example, operational costs, but G&A is one place we can play with, make it less.
How much less are you talking about? Because, as I say, the margins are very slim at the moment. $14 on the $14.67 an ounce sounds quite a lot of costs, but how much of those costs can realistically go?
Well, it's hard to say exactly a number. We'll have to, we're looking into this right now, and I don't have an answer right now. I think we are bullish on silver, and inevitably, if silver is going to hang around these kind of levels, we'll have to think twice about the long-term, survivability of the company. But we're all silver bulls, or we have been silver bulls, and we're looking at silver going back north of $20. It's not going to happen tomorrow. Let's be realistic. But longer term, I think so. Okay, well, let's talk about the share price, because those investors that have been in a while have seen quite a lot taken off the initial investment that they put in at previous to this date, at least. I know, speaking to chief executives, you have no control over the share price per se, but how much more difficult is your job made because of where the share price is? Well, the share price where it is what it is, basically. It's more of an IR point of view, a PR issue, okay? I mean, whether the share price is 30p, 40p, 50p a pound, it doesn't really affect the operations. As long as you have the money in the bank to do what you need to do, the share price, I think, will in time, with the right PR and IR, hopefully adjust to where it should be. But bearing in mind, every company in the silver sector, or generally in the junior silver sector, is much less today than what it was 12 to 18 months ago. So we're not alone in these doldrums.
Okay, all right. Let's just talk a little bit as well about the other part of the company, the Calicanto business, because you do have another arm to your business. I said you're in San Jose, but you made a decision a while back to put the Calicanto business to one side. Why, and what is the future of that business? Well,
Calicanto is 100% owned by us, with no issues attached to it. Right now, we just want to concentrate all our efforts on San Jose. It's the key project. And at any point in time, we can come back to Calicanto and further explore it, do some kind of joint venture if the market conditions are right. But right now, we're in no hurry. There's no pressure to do.
How big is Calicanto compared to San Jose?
From an aerial size point of view, it's only 80 hectares. San Jose is over 6,000 hectares, by comparison. But
you've got 30 million ounces of, I think, of silver at San Jose, haven't you? Is that right?
That's correct, yeah.
And what is it at Calicanto?
Well, we don't have any. We don't have any.
Right, you've not even got that far down.
Mineable resource as such, not from a compliant point of view, anyway.
So if anybody came along and said we want to buy it off you, you'd sell it instantly?
Well, subject to price negotiation. It's not, we're not advertising this for sale. But Calicanto, being 80 hectares and basically on the city limits of Zacatecas, it would be ideally suited to surrounding smaller areas who all want to amalgamate into one bigger area and maybe some kind of venture accordingly.
Yeah. In terms of San Jose, would you sell there?
Well, we haven't got a for sale sign on it, and I suppose in hindsight, going back a few years, Plan A would have been and was, let's get Big Brother in and take it over when the markets were better. It never happened, okay? And Plan B, therefore, was always, okay, we'll do the job ourselves, put it into commercial production, which is exactly what we're doing right now. But we have had a few sniffs. That's all I'll say. Nothing, material. And if someone comes along with the right price or with the right deal, possibly. It's not for me to say alone. It's a board decision, maybe at least, But let's see what happens.
Okay. Where are you going to be in 6 months? End of the year. What's the company going to look like in 6 months' time?
A lot depends on the price of silver, but all things being equal, we'll be, better than where we are right now, and producing more and more optimization.
Do you see yourself up, subject to there not being any major setbacks in the commissioning progress? Do you see yourself being up to full speed by the end of the year?
Full speed in the sense of 1,500 tonne a day, not by the end of this year, but during 2016, yes. But certainly by the end of this year, far more throughput than what we have right now, and with better recoveries and obviously overall efficiency increases.
Okay, well, look, we wish you all the best.
Thank you.
Jim, thanks,
Thank you very much.
Thanks for joining us. That's Jim Williams. He's the Chief Executive of Arian Silver.